The Banking Association of South Africa hosted its annual banking summit today. This year's theme is a safer financial sector to serve South Africa better, and is based on a policy document that was released this year by South Africa's National Treasury.
The financial sector has come under close scrutiny around the world given the 2008 recession. South Africa is no exception. Now, behind these doors is the second annual banking summit, which is currently underway. We're here to find out how the country's bankers plan to keep the sector stable given these turbulent times. The leaders of the South African banking sector gathered in Johannesburg to grapple with some of the issues facing their industry. This at a summit held by the Banking Association of South Africa. The theme for this year's summit was a safer financial sector to serve South Africa better, based on a policy document released by the National Treasury earlier this year.
The summits are an opportunity for government, the industry and other stakeholders to just interact on topical issues so that we are in a public way beginning to debate some of the topical issues, and that then feeds into the policy debate. So what will come out of the summit is to say, we would go back certainly as the industry and say, look, Labour was there, government was there, the following people were there, and these are the sorts of questions and issues that are important to them coming out of the summit. Now, how do we factor that into the policy discussions we have with government? How do we factor that into the stakeholder engagement we have with other stakeholders?
Policy development for the banking industry featured strongly on the agenda. One such policy was the twin peak approach for the financial sector by the National Treasury. The key aims of the proposals are to make the financial sector safer by tightening prudential regulation, improving market conduct and protecting the consumer better.
In order to further strengthen the regulatory architecture and to mitigate the cost of financial crises in the future, we have decided that South Africa should move towards a Twin Peaks model, as it's now called, of financial regulation. This approach envisages, as you will discuss a lot more shortly, the separation of prudential regulation of financial institutions and locates it within the South African Reserve Bank, while locating the responsibility for market conduct regulation and consumer protection within the Financial Services Board. It is hoped that this change will help to address the challenges faced by consumers with regard to high and at times opaque fees and unfair treatment. In addition, it will also coordinate the implementation of the comprehensive Treating Customers Fairly initiative.
But what impact will such a policy change have on the industry?
If we have the appropriate capacity, both in the prudential regulator and the market conduct regulator, so that they understand the entire financial sector, then I think it brings about coordination. It enables regulators to have a single view of the entire financial sector instead of what's happening at the moment. The FSB regulates the insurance sector, SARB regulates the banking sector. So the regulators don't have a complete view of the sector. This will give them a complete view of the sector, both from a prudential regulation and a market conduct regulation point of view, brings about coordination, brings about cohesiveness. Obviously, the devil is in the detail, and we will engage with them on it. But I think the general direction is the correct.
Twin Peaks really talks to a safer financial environment, and I think we're all in support of that. I think some of what is in the detail in terms of market conduct that really speaks to the right of consumers, again, is something that we do support. So I think we will continue to work with industry to ensure that we promote the rights of the consumer. I mean, obviously, it brings into the debate the issue of bank charges and bank fees, etc. And I think, the Minister gave recognition for the fact that post the Competition Commission, a lot was done. Having said that, still that there is a lot to be done.
Regulation played a large part in shielding South Africa's banking sector during the 2008 recession. However, renewed fears of a global economic slowdown have not gone unnoticed.
We are not an island. I mean, we are working in markets where we export to or import from. And the moment when something gets impacted there, you know, it has an impact on South Africa. What do we need to do as a country? We need to create jobs. We need to bring foreign investment into the country. That's what we want. And for that, we need to participate globally.
South Africa, I mean, we've got our balances are strong, our debt to GDP is strong, our bank's exposure to some of these countries is low. So we are kind of not as vulnerable, but of course that doesn't mean that we're not vulnerable. And so it's in all of our interests to make sure that Europe deals with its problem in the Eurozone, in the Euro area, that America deals with its problems, because that is what is the best insurance against those risks.
So, as much as South African banks may have their own house in order, global uncertainty still remains on the back of their minds.